You're listening to chartingwealth.com for Tuesday, the 15th of September, 2015. We continue to look at this rather strange chart. This is actually the two-day chart for the total market. And we have, of course, the big drop that occurred on the two-day candle back on the 24th of August. We've continued to see the market move sideways. And we have a MACD that rotated over going down a few days before the big move. And we have the derivative oscillator, which is switched over going up. We don't have a cross yet on the two-day MACD over the signal line, which is our big indicator. If you don't know what the MACD is, MACD, shown on the far left-hand side of the screen, those who are watching us via video. You can look it up on Google and read more about it. We also have some teachings and instruction at chartingwealth.com. But it's the moving average convergence divergence. It is our favorite indicator. We keep it simple here, and we like to use it. But it's curious. We are waiting right now, and let's look back at the 4-hour chart. We are waiting right now as all this sideways movement occurs, and people might be saying, what are we waiting for? I'll tell you. We're waiting to hear what the Fed does on the 17th. Now, this is Tuesday the 15th, so we have 2 more days. What does it portend? Well, we crossed over going up on the 27th on the short chart, and we've continued to see a sideways slide with this divergence. Now, the divergence would tell you that this movement is not sustainable. But what I find curious is when we look at the two-day chart, we see that our derivative oscillator has flipped over, and we're trying at the bottom here to move over and go up on the MACD, but that has not happened yet. So we will continue to be in a very questionable status. We're in a confirmed down move on the big chart, up move on the little chart, but really no upward movement, just sideways sliding. We're going to see basically the same thing here when we go over to the SPY. This purple line is one I drew at the high point at 106, which is about the highest point we've been. Got a little bit higher, maybe to 106 and 8 cents or so, but 100 I'm sorry, forgive me. I'm thinking about the Qs. This is the MACD. This is the SPY, Standard & Poor's 500. It's topped out right at 200. And what we see happening here is, again, it's topped out. We've seen a couple of knocks at the door on a few days, but it's not gone above that. If we revert back to the 4-hour chart, we can see where we've knocked on it a few times and rotated back down, and we're below that right now. The 4-hour charts continue to try to move up, but again, it is just moving sideways mostly, which is telling us that the market is waiting to hear what the Fed's going to do on the 17th. There's not going to be any market making news until then. And what's going to happen? Well, if the Fed continues interest rates at about 0, it'll probably shoot through the roof. If they confirm they're going to change the interest rate anytime soon, it will drop like a stone. But you'll just need to continue to pay attention and figure out as best you can which way it's going to move, or play it safe, of course. Wait to hear what the Fed says. Now, let's go and look at the Qs right now. We'll drop back to the two-day chart and take a look. Try drawing a little trend line on the two-day chart on the Qs. It is the closest to crossing over going up, which might give you some idea what the NASDAQ thinks about what the Fed is going to do. And there's a crossover on the derivative oscillator also. Now, if we drop back to the 4-hour chart, the half-day chart, you can, of course, see then that there's really not a whole lot going on. I did draw at 106. I drew the purple line there that shows sort of where it's all topped out and hit a few times, rung that bell, and we're not too far from that right now at 105.15. But again, you can see those of you who are watching, listening, crossed over going up on the 4-hour chart back on the 27th of August. Continue to see an up movement. We've got a divergence. We have a huge up movement in the MACD, and the charts have just sort of pittered along sideways as far as price movement goes. So again, the MACD doesn't support that up movement that we see. So let's now convert back over to the the 2-day chart, and let's take a look at what gold is doing. And again, gold is finally starting to move over, crossover going down on the 2-day chart, but if you will recall, we don't put a lot of stock in the 2-day chart for gold. We like to see where it is. But gold seems to move a lot better on this 4-hour chart. When it crossed over going down back on the 25th, would have been a good buy-in point because it has gone down considerably since then. And it looks like it might be getting close to crossing over going up, but we haven't seen that yet. The MACD has not crossed over, nor has the derivative oscillator. If they both cross over at the same time, that would be a really good sign. All the movement that we see over the last 3 half-day candles totally contained in the down candle on the morning of the 11th of September. That was Friday, this last Friday. So continue to watch gold. Might have a good point for buying in virtually to that. And again, we always say virtual purchases. We don't give advice on trading in the market. We are an education website. We are not a stock calling service. Thank you so much for listening to us at chartingwealth.com. We always love to hear from you. You can follow us on Facebook and Twitter. And of course, you can go to the website, chartingwealth.com, sign up for our daily newsletter. Let us hear from you. Be sure also to follow us on Instagram. Thanks so much. Take care. God bless. Wish you the best in trading. And do it the best you can to guess which way things are going to go on the 17th with the Fed call. Take care. God bless trading.